Welcome back to another episode of Palisade Radio. I'm your host, Carolin Gold, and on today's show, we welcome Greg McCoach, who is the editor and publisher at The Mining Speculator. How are you today, Greg?
Good, Carolin. How's things in London?
Yep, very well, thank you. I understand that you've had over 30 years of experience in trading and speculating within the junior markets. So it'd be interesting to go over perhaps some of the mistakes you made early in your career and in hindsight, what you learned from them. The junior exploration space, as we both know, is very risky and a lot of projects never work out for many reasons. So what should you have paid closer attention to perhaps early in your career, Greg?
Well, I think when I first started as just a trader, as an investor, we're all too greedy, right? You think you're going to make a fortune, and you pass up moments when you should have taken profits, and you do that, and you learn the hard way. You take some serious losses, and then you finally learn. But it's not an easy lesson to learn because we tend to get greedy. And you're right. This market is not for everyone. It's very volatile. But when you're presented an opportunity to take profits, I would teach my subscribers, always take some money off the table, especially to at least pay yourself back so you have no risk going forward.
Well, let's go over the long-term potential for precious metals. I understand you're signaling that perhaps $1,600 to $1,700 on the next run should be possible for gold. Would you prefer to see a steady climb like this rather than shooting straight back and above the all-time highs? How would you like to see gold unfold this year, Greg?
Yes, I'd love to see the nice steady rise. I don't want to see a kind of like a hockey handle move, that would only come right back down again. The nice steady rise in the face of what I refer to as the bubble markets. People want to believe that everything's looking great, but I believe there's problems behind the scenes, much like prior to 2008. And gold's moving up quietly, but it will continue to do so. I think there is a big technical resistance right at that 1725 level. So I think gold will gradually keep creeping up to that 1650, 1725 level, and that's kind of where we're going to be until some other big event happens, like a Lehman Brothers moment or AIG prior to 2008.
And as gold continues to climb higher, it does seem inevitable that more M&A activity for the juniors will only continue as majors really have to face the reality of replenishing their reserves. So perhaps go over how you see this M&A cycle taking shape over the next couple of years. How should investors position themselves?
Well, I'm a big believer in, if you're going to invest and speculate in this market, I believe in building a solid pyramid within the junior mining space. And I always tell my clients to buy some physical gold, silver, platinum, palladium. That's bedrock. And then you build buy some of these royalty plays. There's cheap royalty plays that you can get for under $3, like an EMX Gold royalty or an Ely Gold royalty. Those are rock solid. They don't have the undue shareholder dilution that some of the exploration juniors have. And you're right. These majors are desperate to replenish their reserves, and at these gold prices, they're going to be loaded with cash. The problem is they're not very good at making discoveries, so they have to depend on the juniors, that the people that have the expertise in making those discoveries. So I see a lot of M&A activity developing because the people that need the resources have the money, and the juniors will benefit as they make those discoveries.
And I know one junior that you've benefited from is Great Bear Resources. So let's talk a little bit about that and why that stood out to you in a sea of junior explorers. What gave you the sense that this could be something special? I understand you went to visit the site.
Yes, yeah, we got involved in the 30-cent range. It had a flavor to it. A lot of times these juniors are about the management teams, and I really like Chris Taylor, a young and up and coming person in our industry that really had my attention. And of course, I love the Red Lake camp. Been there before. It's one of those camps that has all the infrastructure, has all the mining expertise right there. The mines basically are all right 10, 20 minutes from town. So it has got an airport. So if someone makes a big discovery there, the majors are going to fight for it, especially if it's over 2 million ounces. So what really stood out for me with Great Bear is I like going to school on other people's dime. At least 4 other companies had spent quite a bit of money there. And when I went on the site visit, it was really obvious to me that some of the geophysics that we had access to, it had these nose folds that are kind of traps or pockets where the gold could be. We know there's gold there, but no one was able to find enough of it economically. And basically, Great Bear just thought out of the box, spun the drill 180 degrees from whatever anyone else was trying, and that's when they started to hit. So it's exciting. It's fun to make money when that happens.
Okay, and let's go over how do you walk away from a stock, say if the drill results are not what are expected. Would you stick with the story? How does that process work for you?
Yeah, it just depends on each situation's unique, each area is unique. And so you have to look at what the original thesis was for your success. And if the drill results are telling us, we're not getting what we were thinking with our original thesis, then yeah, you have to rethink this stuff. And the problem nowadays is with exploration juniors, where you can get undue shareholder dilution very quickly if the stock price is low. These companies need to keep going back to the trough to get more and more money. Well, as the share structures start to get blown out, the opportunity, you kind of lose it. The opportunity is lost because the shares are just way out of whack with reality. But I try to stick with the early stage companies that have tight share structures but have other data from other people who have spent the money. We've learned from others in the past. We're in a good area. We know there's mineralization there. We have a new theory about where to drill, and with a few drill holes, you can get an answer pretty quickly. If the answer is positive, we move forward. Usually, we can raise money at a higher level, which doesn't dilute us so quickly, and that can work out very well. But overall, I do believe in the philosophy that if you want to swing for the fences with these exploration stocks, you have to put money across not just 1 or 2. I just say, give the analogy. Let's say you get 10 of these things, right? You spread the money out. From my background, my track record, we know that we're going to lose money on 1 or 2. We're going to spin our wheels with a couple. We'll make 2, 3, 4x on a couple others, but 1 or 2 of them could go 10x or better, and that's really what you're playing for. So you handicap your odds in your favor when you spread the risk out over a bunch of good companies. So if someone's like listening to me and they look at my newsletter and they look at the companies that I'm recommending, these are companies that I'm looking for those special circumstances that these are great, these are really good offerings, these are good companies with good people trying to do the right things for the right reasons. But I'm looking for exceptional companies. Let's go a step above that. And how do we discern that? Well, Great Bear was one that did stand out to me because of the information, the data, the circumstances, the share structure, everything just lined up for me. And that doesn't happen very often like it did with Great Bear.
Yeah, very good. Okay, well, let's move on and talk a little bit about some books that have perhaps shaped your mindset and career. Have there been any books that have helped you to become a better investor?
Oh, for sure. J. Paul Getty's autobiography. He was the one that really taught me to be a contrarian. In this particular market, precious metals, junior mining shares that I've really focused on, you're either a contrarian or a victim. Rick Rule always said that, and I have to agree with him because that's certainly been what I've found. If you buy when the market's high, you tend to get slaughtered. So you either learn to buy this stuff when the market is dreadful, when absolutely nobody wants to buy in the market. That's when you have to step up to the plate. It takes some courage. It's not easy because people tend to want to invest with the masses, and you can't do that in this space. You have to go against the grain, learn to buy when the news is bad, when there's blood in the streets. That's when you buy. And then you have very little risk because all markets cycle back, he said. And that was really a turning point for me where, as an investor previous to reading that book, I had made a little bit of money, but I really wasn't what I would call a good trader. And once I learned that lesson, that really took me to the next level, and from there, so it worked out really well.
Fantastic. And as we begin to wrap up, Greg, before the call, we were talking about your experience in Vancouver at the Metal Investors Forum and the sense at the conference is perhaps getting much more positive from investors out there. And I know that one company you've been looking at, new Carolin Gold. Could you talk a bit about that? I know you've been following them for a while.
Yes, this is a story that has one of these unique set of circumstances. It's a previous mine, the Carolin mine, which is about 150 kilometers outside of Vancouver. It's on the Josemine Fault, a big mineralized area that the company has a 24-kilometer district scale property that right along that fault. It's very attractive for drilling and for exploration, and there's mines all around the area. The Carolin mine itself was shut down due to lower gold prices when it was first operating. But right before they shut down, they were underground, and I've been underground. I did the site visit. There's a very interesting area where some top geologists agree that, from an exploration standpoint, the company was getting ready back then to drill this underground area. And the plug got pulled on them right before it happened. So the highest potential high-grade drilling never took place. So all these years, everybody's been trying to say, why haven't we done that? We really need to get back to doing that. Well, the company put several drill holes in. It's at the assay lab. And yes, the company's not doing very well right now in the market because the juniors that don't have a lot of cash are suffering right now. It's hard to raise money in this environment still. But they did get these drill holes in, and we're hoping that we can turn the night to day with some of these results that should be forthcoming here very soon.
And your experience of Vancouver for the past week?
Oh boy, just much more exuberant, The big money is not in yet. I mean, some of the big players within the industry that are known to be big junior mining stock investors, of course, are involved. But the big funds, I've always said to people, from that big run that we had from 2001 to 2008, before the meltdown happened, people don't realize that it was these big funds out of New York, the hedge funds and funds around the world. They were 70 to 75% of the money behind the big moves. They were writing checks almost recklessly back then into anything precious metals and resource related. Retail investors only represented about 25% of that move. So I usually go to the Beaver Creek Precious Metals Summit every year. It's one of my most important conferences I attend because I want to find out what these guys are thinking. Are they coming back into the market yet? And they've been kicking the tires for the last few years, and the attendance has definitely increased every year the last several years. And this past year, it was record attendance this past September. So they're looking for deals right now that are revenue, the production, near-term production or revenue deals where they're making money. They're not so oriented yet to exploration, but when push comes to shove and precious metal prices go where I think they're going to go, people are going to come to anything precious metals. Production, development, exploration, physical. I just see a time coming when things are really going to get going. So I'm very optimistic, very bullish for the future, and I'm glad that we're not jumping up dramatically yet. I love this nice, steady, slow rise that we're getting, and definitely the exuberance, you could feel it at this show. Not that people are dropping all their money in the market yet, but they're getting to the point where they're buying selectively, and I think that will increase.
Okay, well, many thanks for your time today, Greg. It's been great having you on the show today.
I appreciate it. Thanks, Graham.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Hey, Troll, did you hear what's going on in Yemen?